5 seconds to the open.
Ready?
Who wants to get this thing started right about now?
Welcome to Follow the Money Weekly with your host, Jerry Robinson.
Welcome.
Not just some guru.
Oh, really?
Your host is an economist and a best-selling author.
What an interesting news item. I'd better write that down.
And just someone who likes to make money and help you to make money. Welcome to Follow the Money Weekly. And here he is, Jerry Robinson.
All right, welcome friends to another episode of the Follow the Money podcast. We're here to examine the headlines, track the trends, and most importantly, seek truth in a very noisy world. I'm your host, Jerry Robinson, and today we've got a pretty loaded episode for you. We've entitled today's episode, which is, by the way, episode number 487, The Big Beautiful Debt Spiral. You've probably heard the phrase a big beautiful bill tossed around lately in political circles. Well, the House just passed their version of that bill, a sweeping set of tax cuts championed by President Donald Trump. And while it may sound good on the surface, this thing comes with a hidden price tag that could make your head spin. According to the Committee for a Responsible Federal Budget, the bill could ultimately add up to $5 trillion to the national debt over the next decade if the tax breaks are extended. Then we also have some new numbers out this morning from the CBO showing that this new mega bill would expand deficits by about $2.4 trillion as it stands without those tax breaks being extended. So let me tell you, that is not a conservative kind of spending bill, right? That's not even rational. That's economic fantasy dressed in red, white, and blue. And here's the worst part. Both parties, Republicans and Democrats, continue to play fast and loose with your future. One side spends, the other side borrows, and neither side seems to care what kind of mess they're leaving behind for you and your children and your grandchildren. So today, we're going to break down this bill. We're going to talk numbers. We're going to look at what it means for our economy, our future, and for your financial well-being. And we'll connect it all to the broader trend that we've been tracking for years, and that is America's addiction to debt and the silence of political leadership on real solutions to that debt addiction. We'll also take a quick look at the markets. I'll provide some of my latest commentary in segment 2, and then we'll close out the show with my final thoughts. So with all that said, let's dive right in. All right, friends, let's talk about Trump's big, beautiful bill. You may have seen the headlines: sweeping tax cuts, lower tax rates, a promise of prosperity. But behind the shiny wrapping paper is a hard truth that too few are willing to say out loud. This bill is a debt bomb, and Washington just lit the fuse. Let's get into the facts. According to the House-passed version of the bill, the tax cuts in this bill would add between $2 and $3 trillion to the national debt over the next decade. But if some of the cuts are extended, as is often the case in Washington, then according to the Committee for a Responsible Federal Budget, the real cost could balloon closer to $5 trillion over the next decade. Just think about that. That is not at all anything we would call financial discipline. That's financial malpractice, right? Now look, I am not anti-tax relief. I think Americans deserve to keep more of what they earn, but there's a difference between responsible reform and reckless abandon. And what we're seeing here is a reckless abandon wrapped in a campaign slogan. You know, humorist P.J. O'Rourke once said something brilliant and biting when he said, quote, "Republicans are the party that says government doesn't work, and then they get elected and prove it," unquote. Sadly, that quote hits harder every single year, doesn't it? Because this bill isn't just about the tax rates, it's about priorities, and Washington's priorities are completely broken. But before we go deeper, let's just zoom out for a second, figure out where we are right now financially. As of this recording, the U.S. national debt is a hair away from $37 trillion. It's like 36.9 something trillion dollars. That's more than $98,000 per American citizen and well over $300,000 per taxpayer. And yet Congress, regardless of party, continues to spend like there's no tomorrow. In 2023, just the interest payments on our national debt cost nearly $900 billion, which is more than we spend on defense or Medicare. And those payments are projected to exceed $1 trillion annually this year and into next, even without new spending bills like the one being proposed now. So the question becomes, and it's a perennial question we need to ask, how are we going to pay for this? Well, there's only three options, right? You can raise taxes, you can cut spending, or you can print more money. And let's be honest, nobody in Washington wants to do the first two. So what's left? Well, printing more money, right? Which is obviously inflationary. And that's the quiet thief. That's the stealth tax. It's the one that nobody wants to name, but it's how empires rot from the inside out. If you missed our last podcast episode about the lessons we can learn from ancient Rome, I encourage you to go back and listen, because you can see how empires have faced this same problem all throughout history, and sadly, the problems look very similar to what we're seeing today. Now, let's come back to this Trump bill. Supporters say that it's going to supercharge the economy. They say that lower taxes are going to juice the overall economy by creating jobs and raising wages and stimulating growth. And sure, it might juice some short-term growth, just like an energy drink gives you a quick buzz, right? But what happens after the buzz wears off? What happens when the bill comes due? You see, we've seen this before. Remember 2017? Trump's last major tax cuts promised to pay for themselves, but in reality, they added nearly $2 trillion to the national debt, and they widened inequality in the process. And today's bill, it goes even further with even less honesty about how it's going to be paid for. And the bigger point that I want to make is that this bill is not about Trump. It's not about Biden or whichever name is on the latest spending package. This is about the broken American political system. It's about a political class that has zero incentive to solve our nation's biggest fiscal crisis. It's about a corrupt political class that has zero incentive, quite frankly, to solve our nation's biggest fiscal crisis. It's about voters who have been conditioned to think that debt doesn't matter as long as the benefits keep flowing. And quite frankly, it's about generational theft, because we are mortgaging our children's and grandchildren's futures to buy political popularity today. So what do? Well, I'll tell you what I've been saying for years, that the cavalry is not coming. You and I, we have to be our own solution. That means building a financial plan that doesn't rely upon Washington to get its act together. That means owning hard assets. It means diversifying your income streams. It means minimizing exposure to the whims of the broken political machine in Washington. It means understanding this basic truth that you cannot print your way to prosperity. And at some point, the music will stop. The bills will come due, and the empire will be shaken. So I want to leave you with this as we head into the next segment, that we are watching in real time as America's political leaders promise prosperity while delivering more debt. And if history teaches us anything, it's that this does not end well unless people like you and me wake up and prepare. There's a lot more to say about this big, beautiful bill, and there's a lot of things that are happening on Capitol Hill right now as we speak. We're even seeing the GOP become fractured around this bill because they know how hypocritical it is that they are now saddling the country with more debt after promising not to do that very same thing. And don't forget, the Republicans control the White House, they control the Senate, and they control the House of Representatives. So they own this debt. They're going to own it. And the midterms are just, a matter of, a year and a half away, so even less. So I'll be talking more about this with our members here at followthemoney.com, where we do live webcasts right here at our website every single week to keep our members informed of the most important things they need to know. But right now, we're going to head over to segment 2. It's coming up next, where we're going to look at the market's reaction to all this. We're going to look at the dollar, gold, stocks, Bitcoin, and more. Stick with us.
Are you prepared for the next stock market crash? It's not too late to protect yourself and your family with Jerry Robinson's best-selling book, Bankruptcy of Our Nation, now in a new audiobook format. Whether you want to listen in the car, at the gym, or on your iPad, we've got you covered. Get the entire 300-page book in audio format for only $24.95. That's over 12 hours of Jerry Robinson's economic wisdom, financial insights, and practical money-making strategies for only $24.95. Inside this new audiobook, you'll learn 21 profitable income streams you can create both now and in retirement, along with unique tips on how to inflation-proof your investment portfolio using our own PACE philosophy. And our 5 levels of financial freedom, which is Jerry Robinson's personal blueprint for building true wealth. If your goal is to become a better investor, increase your income, or just understand what is really happening in the global economy, you cannot afford to miss out on the vital information that is jam-packed into this 12-hour audio book. Get instant access to Bankruptcy of Our Nation in audio format right now by going online to www.ftmdaily.com/bankruptcy. That's ftmdaily.com/bankruptcy. Download your copy today and get on the fast track to true wealth and a lifetime of financial security.
Hey friends, this is Jerry Robinson from Follow the Money Weekly. Recently, we have been receiving many emails from our listeners commenting on the great help they're getting from our precious metals expert, Tom Cloud. Gold and silver are excellent hedges against the growing threat of coming U.S. inflation. Who's your gold guy? Make it Tom Cloud. With over 30 years experience with precious metals, Tom will answer all of your questions. Don't buy your gold and silver through some call center and pay inflated prices. Call my good friend Tom Cloud and speak directly with him and get all of your questions answered. For a limited time, Tom is offering free shipping and insurance on every gold and silver purchase made by our listeners. Call 800-247-2812. And when you do, tell him that Jerry Robinson from Follow the Money Weekly sent you, and he'll throw in that free shipping and insurance on your entire order. Call your gold guy, Tom Cloud, right now for the very best deals on gold and silver coins. 800-247-2812. That is 800-247-2812.
I am a staunch Republican, and I think the government needs to make cuts. There's got to be cuts in Washington, where it's not going to hurt us.
Okay, let's go over the list of what we should cut. Should we cut veterans benefits?
No.
Social Security?
No.
Education?
No.
Sandy relief?
No.
Medicare?
No.
Health care?
Absolutely not.
Military?
No way.
Unemployment benefits?
No.
Should we cut veterans benefits?
Not at all.
Social Security?
No.
Education?
Nope.
Medicare?
No.
How about the military?
Not at all.
How about unemployment?
Nope.
How about the Sandy Fund?
Not at all.
I mean, everybody says we have to cut the government, but nobody wants to give anything up that they're actually getting from the government.
The federal government should cut their spending. I think they have a big spending problem on stupid stuff that we don't need.
Should we cut the military?
Definitely not.
I'm totally for budget cuts.
What should we cut?
I don't know.
How about education?
No.
How about the hurricane relief fund?
No.
How about unemployment checks?
No.
How about the military?
No.
How about food inspectors?
No.
How about veterans benefits?
No.
So what should we cut?
I don't know.
Welcome back to Follow the Money Weekly. And here's Jerry Robinson.
All right, friends, welcome back to the Follow the Money podcast, one of the longest running personal finance podcasts on earth. So in segment number 1, we talked about the big, beautiful bill that might just blow a crater-sized hole in America's finances, right? Well, now let's take a step back. Let's take a look at the financial markets, and one of the most important financial markets that we talk about here, even though it's kind of boring, because it's just an index, but it's very important, I think, just to kind of tell what's happening in the broader stock market and, quite frankly, the global market, is the S&P 500, right? It is an extremely important index for kind of determining which way the wind is blowing. In fact, some studies have been done that show that 3 out of 4 stocks in the U.S. stock market follow the trend of the S&P 500. And right now, that trend is up. Right, we have an uptrend across the board here on the S&P 500. We've had quite an incredible rally, too, from the April 7th low. April 7th was the day where the markets began to really fall, but then they rejected lower prices and they rallied back up. So April 7th was kind of the bottom, the local low for the recent sell-off that really kicked off in late February, where the S&P fell from, around its all-time high above 6,100 all the way down to about nearly 4,800. That's a key level, too, that we had seen before that had served as resistance and support over time. But since that April 7th low, we've really come back with a vengeance. Now, the S&P 500 trading just a hair away from 6,000, so it's almost at a new all-time high. I think it'll freak people out if they see that the S&P 500 is at a brand new all-time high. If you turn on the news and hear that the stock market's trading at a new all-time high, many people may not really believe it because of the tumult we've seen over the last few months with tariffs and all of this. But nonetheless, sure enough, we had a 200-day moving average breakout on the S&P 500 back in early May. And since that time, we've held it. In fact, we even pulled back to test it later May. And then we moved on higher. And now we're, like I said, nearing 6,000. There's some key levels to watch right now, 5,800 being among them. That's the 200-day moving average, which is currently rising right now. Another key level to watch would be about 5,650. Now, that would be a key support area. Now, as far as upside, we believe that we're going to hit a new all-time high sometime over the next month or two. I think it's pretty clear that we are moving higher right now, and we could even see a melt-up scenario over the next few months. There's a lot of money on the sidelines. Don't forget, there's about $7 trillion sitting in money market funds right now. And that's there's just a lot of money. That's a lot of nervous Nellies out there who are waiting to get back in. They're waiting for the all clear. A new all-time high might be that all clear for many investors. So I think we could see a sustained rally this year as the markets recover from their pretty hefty sell-off over the last couple of months. Another important measure for the stock market is the market breadth indicators. In particular, I like to look at the S&P 500 and look at the number of stocks, which obviously there's 500 in that index, but which ones or how many, what percentage of them are trading above their 200-day moving average. That, of course, is a major line in the sand for stocks. And when we look at that number right now, that percentage, it's about 53%. So about 53% of stocks are trading just above their 200-day moving average or above it, well above it. And that, suggests to us that even though the market's about to break out to a new all-time high, it's just 100 or 200 points away, we're still relatively low in terms of the market breadth. So there's a lot more potential upside that the market could have here is what that's telling us. So we're still kind of in neutral territory on the market breadth using the 200-day. If you look at the NASDAQ 100, it's another market that we track. I like to buy the NASDAQ 100 ETF for my own investment portfolio. I tend to do that on a regular basis. That's one of the markets I've been specializing in for several years. That also bottomed back on April 7th, and we've seen a similar rally in the NASDAQ 100. It's now trading, again, just very close to a new all-time high. Again, I think that's going to happen over the next month or two, where we'll see that new all-time high hit. And sometimes people get confused. They say, now, how in the world can the stock market go up when there's economic concerns or geopolitical concerns? And friends, that's something you've just got to learn for yourself, is that the markets are not the economy, right? Stocks are not the economy. They oftentimes will do very different things, and it'll confuse some people. But regardless, the momentum looks real right now in the stock market. We think we're going to see higher prices straight ahead. Now, a big part of the reason why we're seeing stocks rise right now is not all, but part of it has to do with the fact that the U.S. dollar continues to suffer. It continues to come down. You may remember our commentary on this, that we had said that it was very likely that the U.S. dollar would go through the same pattern that it did in the first Trump administration. Back in 2017, the dollar rallied, or 2016, I guess, it rallied into the Trump inauguration in the months preceding. And then in January 2017, right around the time of the inauguration, the dollar peaked, and then it came right back down with a vengeance. We said, wouldn't it be interesting if that happened again? We were kind of thinking it might. And sure enough, if you look at a chart of the U.S. dollar beginning, say, around October, you'll notice that it hit a local low. It rallied into the election, into December, and then peaked in January right around the inauguration. And sure enough, since that time, the dollar index has fallen from 110 to about 98, 99, somewhere in there. So that fall in the dollar has also helped support not only the stock market, but also gold. And we think that the dollar could come down even to the 97 level or so in the coming months, which could really support even more in terms of higher asset prices, in particular gold, which is trading just below a recent all-time high. It's currently trading at about 3,400. We had a nice robust rally earlier this week as gold began to move higher. And actually, it's been moving higher since mid-May when it got down to nearly 3,100 very briefly. We've also seen silver picking up as well. It's getting very close to its March high of around $35. It's trading just below that now as we speak. We do think we could see a further upside here in silver. And platinum, we've also have some hopes that we could see platinum continue to move higher as well. It's currently trading just below 1,100. It's been having some pretty good solid strength as of late based upon the charts. When you look at the gold-silver ratio as well, it really favors silver in this current environment. It's really out of whack. A market that we really haven't seen accelerate to the point of some of the other major indices is the Russell 2000 ETF, the We Track IWM, or just the Russell 2000 in general. It just really hasn't kept pace with the S&P and the NASDAQ 100, although that market also could benefit amid falling interest rates. Of course, we don't know when that's going to happen. The Fed still has to monitor what's going on and figure out what it's going to do regarding rate cuts. We still expect 3 rate cuts to occur this year, despite all of the, all the hand-wringing about it. And perhaps we'll close out this segment by talking about Bitcoin. I just got back from the 2025 Bitcoin conference in Las Vegas. It was quite an eye-opening experience. I learned a lot. I might spend a podcast episode in the future talking about some of the lessons that I saw. Not all of the lessons were positive necessarily, but as a long-term investor in Bitcoin, I wanted to go see what the conference was all about, and it was very, as I mentioned, very eye-opening. But in fact, I just gave a really big overview of all the things I learned on our latest live webcast for our members over at followthemoney.com/webcast. We do a weekly webcast there where we talk about a lot of really important things, I think, for traders and investors. We educate, we empower folks there. But looking at Bitcoin right now, we can see that Bitcoin's trading at about $105,000. It's pulled back from the $112,000 high that it had hit last month, in the month of May. We think that Bitcoin is going to continue higher this year, and I still maintain a $275,000 price target on Bitcoin, for this year. And I think that'll probably come, in the latter half. I think we'll see quite a big rally. And I think that rally could, we're already in a rally. For some people, it doesn't feel like we're in a rally because, Bitcoin has been 2 steps forward, 1 step back this year. It's been a little bit of a different kind of rally amid this current cycle. We are in year 4 of the halving cycle. And so this is typically where we get that big blow off top. Think 2013, think 2017, think 2021, and now 2025. After 2025, we would expect, to see some pullback there. And then the next, major high coming, the next major blow off top coming 4 years later in 2029, right? We'll see if the cycle holds. It may not, but so far, everything looks like it's still all systems a go for Bitcoin to continue higher. So we are bullish there. The other market I just want to briefly mention before we close out this segment is in the crypto world is Ethereum. Ethereum is a market that we have been bullish on and long-term on now since 2017. I want to say it was 2017 when we began buying Ethereum. Of course, it was very cheap at the time. But Ethereum now is trading, around $2,600 or so. But if you look at it on a daily chart, you'll see that it's been fighting at its 200-day moving average for many weeks. And we could get a breakout there. And then the $2,900 level will become the next resistance, and then about $3,300. Once we get past those levels, we could go on to hit a new all-time high. Now, that would require us to get up to about $4,800. I think we'll see that potentially this year. I think Wall Street is really going to like Ethereum. They're trying to extract yield from Bitcoin, which is not really something Bitcoin was designed to do. It's really digital gold. But it's Ethereum that can provide the yield, and it already does through the staking mechanism. So we expect that Ethereum could also have a very good run this year, and we remain bullish and long on that innovative technology. All right, friends, with all that said, let's bring this segment here to a close. We'll be right back with some concluding thoughts. Hold tight.
Wall Street owns the country. It is no longer a government of the people, by the people, and for the people, but a government of Wall Street, by Wall Street, and for Wall Street.
All right, friends, welcome back to the final moments of today's broadcast. And by now, you've seen the pattern. The national debt isn't just high, it is at historic levels, and we're pushing past $37 trillion with no sign of slowing down. Congress just passed another bloated spending bill, and everybody's acting like this is just business as usual, but this is not business as usual. This is generational theft. Now, let me leave you with a final word, and this time it's by Thomas Sowell, who put it this way, and this hits especially hard today. He said, quote, "Accumulated public debt is a burden on the future disguised as a benefit in the present," unquote. That's the game. Give the voters a sugar high now and hand them the tab tomorrow. All the government spending feels good in the moment, but someone will have to pay, and that someone is you, your kids, and your grandkids, and perhaps even sooner than we think. You know, it can't just be all about economics. It also has to be about ethics. And this isn't just happening by accident. As Tacitus, the Roman historian, put it 2,000 years ago, the more corrupt the state, the more it legislates debt. And isn't that exactly what we're witnessing today? Debt is not the byproduct of dysfunction anymore. It's become the product. The system is working just as intended for the political class, for the donor class, for the special interests, but it's not working for you. And the truth is, Washington has no incentive to stop the madness because debt is power and leverage and control. But for everyday Americans, especially those trying to build wealth and protect their families and prepare for the future, this debt spiral is a storm cloud. It is a stealth tax on your savings and a drag on growth and a threat to your very freedom. So what can you do? Well, you can get educated. You can get prepared. You could build a plan that doesn't rely upon politicians doing the right thing because they're not going to. And that's what we're here for at followthemoney.com. It's to help you navigate the storm, not ignore it. To show you how to build freedom even when the system is falling apart. I encourage you to visit our website, check out our free resources. We have a YouTube channel, we have social media channels, but we also, more importantly, have memberships where we teach and educate, equip, and empower people just like you to be able to create financial freedom for yourself and for your family. Thanks again for listening today, and I encourage you to stay alert and stay ready in this current environment. And remember, when you want the truth, just follow the money. Have a safe and prosperous week, and I'll see you right back here next time. Until then, God bless.
Contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before making any financial decisions.